right, let's jump into things. Just getting back to these sort of daily analysis and have a look over the charts. Personally, I still sort of look over the charts and sort of knock things out, but due to my arm being sort of absolutely smashed apart, haven't been able to absolutely sort of even use the mouse and that easily. And anyway, long story short, back for the moment doing these sort of things. All right, so we'll jump into it. Have a look at gold to start off with this here, because yesterday, if you have a look at the sort of analysis from the weekend, definitely see the analysis from the weekend, because that price action yesterday was just pretty much spot on of what we were looking, what I was looking for, and what I was calling. So we're early short into the sort of gold play, closed out the shorts down here, got long. We even got back up to 80 and then got short again for only a small bit. I actually had a couple of issues with the platform, which annoyed me a little bit. So to be on the safe side, I closed out probably a little bit early, got out about here, so I missed that last little push back down here. But now again, back on the long side, only because if we look at this here, we've got this sort of play that we were looking for. Come up to around this area, sellers to move in. That's happened. We've seen that push down. You got to think, okay, well, that's what the sellers are doing. Because remember, when you're doing this analysis, you're looking at the two segments of the market. You can't just look, okay, it's only going up, it's only going down. They're what's called perma bulls, perma bears, whatever, permanently bullish, permanently bearish, whatever. But you've got sellers that are moving down. They're trying to drive it down. They're trying to drive it down, do this thing. What are buyers doing? Well, they didn't put in any resistance along here, but the buyers. So let's change a different color. Whoops. Buyers are pushing up here. And this is what you're trying to sort of, this is the point of the analysis. You're trying to sort of work out where the buyers are, where the sellers are at, and basically who's overcoming who at what time. So we'll call this one pinpoint anyway. Actually, no, sorry, direction. So you've got the buyers pushing up here. They pushed all the way up here. As you can see, sellers came in. Buyers have moved up. So buyers were sitting down here to give it their first go. Sellers, they're still pushing down. Overall theme with the sellers, obviously because they're sellers, they're trying to push it down like this. But what we're seeing is the sellers that got to this point here yesterday, this is what we called over the weekend at 80, they pushed it down. That's fine. If the buyers weren't keen, they would have allowed it to come back down here, attempted for that double bottom. Because if you get rid of all this sort of stuff here, and remember, this is the point. This is what we talk about constantly with it all. This is the three-wave structure where you've got push down, find support, push up, find resistance, push down, break there, came through. It didn't hold down here. If this had closed down here, then bang, we'd be down here, over here, because that means there's no pushback from the buyers. But this big wick here shows us that the buyers are really keen at this level here. Now, whether this is buyers or whether this is profit takers, closing a short position, you've got to buy it back, so it buys up. That remains to be seen with it all. But whatever we know is that the market is having a reaction at this level. So let me just manage a position very quickly on this other screen. Pauses. And what we're sort of seeing from this here now is basically this here is where your sellers were. So what we got? Sell zone, sells. Let's just do that. Sell. So that's where your sellers are. So the same sort of thing where you look in this structure here, 1, 2, 3. Well, buyers overcame the sellers. The sellers aren't able or aren't committed enough to push it down to get it lower at this point. So now we're looking, okay, well, what happens on the other side? Now we're seeing, are the buyers committed enough to take it through this level? Well, first time they weren't. Sellers gave it a shot. But maybe the sellers at the moment, what we're seeing is that they're running out of a bit of power. They're running out of a bit of steam because, as you can see, at the moment, this candle's pushing up through this zone. So if if you're thinking, just put it on a very basic level, I've got 50 pieces of whatever to sell. Well, I've sold sort of 45 of them. I'm trying to sell a few more now. Well, people are just buying everything, and they're overrunning that level. So as this sort of stands at the moment, use this RSI. RSI certainly got room to move. This is on the 4-hour. It looks like it could potentially want to push up a little bit higher here. Now, again, this is a 4-hour candle. We're 2 hours 42 left. So we're only like just over an hour into this 4 hour candle. There's no bottom wick, so it's something to be wary of because, of course, if you look at this candle over here as an example, this at one stage would have been a big blue candle up like this. What happened? Sellers came in, pushed it down, flipped the candle, and then drove it down even further. So just because this is up now, where we at 9:17 in the morning, I should have done this 9:17 on the Tuesday, the 19th of May, doesn't mean that this candle is going to stay bullish. But when the candle closes, that's what we're kind of looking for. That's when we're trying to sort of see, is that enough to sort of push it up here? So as it looks at the moment, it does look like they're trying to sort of take out this level. We've got a level of sellers here with the top wick here. We've got a level of sellers here with this top wick here where the sellers came back in. So we know that should the market have an option to get it at 45.80s, it's going to sell it down. And it's done that twice. Now, if they're not there, then you look a little bit higher and sort of think, where else might it go up to? Well, realistically, it does open the door potentially to back up mid 46s. Now, whether it gets to that, it's a different story, but that's where it kind of does potentially open it up just from a technical standpoint that they could push it up. You look for the RSI going into the overbought. You look for a couple of attempts to move higher and the sellers moving in, and that you can get down onto a lower time frame and you can say, okay, do they sort of go up and stop it over and over again? So there's a bit of a congestion over here around this 4600, which is obviously round number, 46 to 4620. So for me, I'd be happy to sort of, if I can get up around this area, to give it a bit of a short position attempt. You've got RSI on the 1 hour, you've got the RSI on the 4 hour, both of them sort of showing that there's potential for this thing to sort of continue up over here. It's a funny time of day. It's early in the day. It's only 9:19. So, we've got the possibility that this could just go boom, boom and come down here. And on that side of stuff, we're looking what happens at 45.30s and then obviously 45.10, that kind of area there. I do think overall we will be sort of heading down over here, but it doesn't mean we can't sort of squeeze up here first, drag in some more longs, squeeze out the people, because that's the thing. Like I took profits down here, like in 45.90s, around 4500, 45.90s. I think 45.82, I think was my best one. As you can see, right down the very bottom of this wick over here and flipped long. Played very well. The bank was good. But, not everybody's doing that. You got people that here that they don't trade, 15, 15 trades in a day. It's only one trade, but 15 executions, you know what I mean? And they're sort of short maybe from up over here. Well, good on them. But you've got to squeeze some of these people. And this is what I said. Again, look at the weekend video as to why I said it was going to come up past these levels here. I said it was going to come up past these levels here because you get a lot of these sort of textbook traders who they're like, okay, it's gone down. I move my stop. So here's my stop. Oh, it's gone lower. I move it here. Okay. I move it here. Okay. I move it here. And that's provided that they got in at this area over here. A lot of people were late to the party. And this is what I said yesterday, that sort of like there'll be an early move down and then a move back up. And you got to think why? What's the mechanics? Why would it do that? Okay, yeah, you could say people that's where the market wants to buy it from. Yes, but even if it is to go down over here, why doesn't it just go down? Because what they're trying to do is get the people that sort of just clicked on. And this is what I said, watch the weekend video because the weekend analysis, because it happened exactly as I said. You get the people that sort of click on and they go, oh, well, did you see gold went down? Oh, yeah, man, I'm going to short it. Yeah, it's got smashed, broke right down, came down $100 or something. I'm going to short it. And I said, they're going to be right for a minute. And they were. I mean, as I said, I was short. I shorted this last little patch through here. They were right for a minute, but then they were wrong. And so what does the market do? It teaches them a lesson, and it goes, well, if you sort of like are late to the party, the profits don't belong to you. The profits belong to the people that were shorting up over here and shorting here. And so they shorted, and because people say, hey, look, just move your stop and don't take your profits and all this kind of cutesy textbook stuff. They sort of get in here, they put their stop. What happens? They get stopped out. Then comes down again, maybe they give it another shot, boom, they get stopped out again. And what it's doing is it's feeding above each of these previous highs, coming up over here and over here and over here. And that's what I'm saying, that sort of like people that, haven't sort of like got in on Monday morning and thought, hey, look, I'm going to do this thing right now. So look, gold's pushing up. I'm going to take some profit on this. Not greedy. I know I did say I was going to go higher with it all, but well, that starts me off. I'll back in 1 second. Yeah, right. Just close some longs and that. So as I said, look, I'm saying, hey, look, I want to come up over here, but as I said, look, I'm here to make money. And I think this is where a lot of the market gets caught off guard because they're sort of like, the textbook says this, the textbook says this. And I know that I've been rabbiting on about this, but this is the structure and this is the mechanics that I sort of look for and how I sort of trade these sort of things. Anyway, point being is that we are seeing it overcome this level here. I do think overall we probably will come down over here. However, I would be reluctant to sell into this thing straight away. Happy to take the profit and sort of see what happens. I don't want to get caught sort of trying to long this thing and then find this move does happen, because if you do get caught in this, well, if you get caught long here and we start to move back down here, there's a possibility that it breaks through this level and we do come over here. And what happens then? Well, you're stuck up over here if you're not taking your profit. So it's just something to sort of keep in mind with it all. Anyway, point being is that sort of like, the profits don't belong to people that got in Monday morning, belongs to the people back over here. What they're doing is they're squeezing up here. It's called the pain trade. All these people that are short, people that shorted here, they had really good profit. What's happened to it now? It's just eroded and it's come back up here. Put your stop to even, well, you're going to get stopped out, and then we'll see this next move come down over here. So all that sort of considered, I do believe that sort of like, shorts will come into play. Do I want to do it right now? No, I'll probably wait till sort of maybe getting up around here. It's maybe a little bit more extended out. It's only 20, 30 bucks away at the moment. If we get up over here and we see a couple of rejections, if we look at these previous highs, these sort of things here, like rejection, to do rejection, to rejection, you know what I mean? It doesn't have to be, this is on a 1 hour now, further apart, but, a couple of attempts to move higher, and then eventually a break back down is probably what we're looking for. I don't think we're going to see some big spike and then sort of reversal in one candle. So it's no sort of race to get onto the short side, in my opinion. But we'll see what happens. As I said, it's still 9:25. So I've been rabbiting on. We've got 12 minutes. Haven't even actually picked out the levels yet. So that's what I'm looking for. A little bit of move high here, and then potentially a move back down a little bit lower. Okay, so let me just write this up. All right, cool. Let's tick on. I'll try and sort of get through the other ones a little bit quicker. We got silver. And of course, how many 50 charts that I've using? This is the one we were using. So silver actually played very well and is respecting the chart very nicely at the moment. This was the sort of call last week. As I said, watch the weekend video. I explained this in depth as to sort of why, or I was sort of believing that we were going to be having this sell down here. I called it at what 80, 86, I think it was. It was about here or so, just prior to this thing going up, spiking, and then we dropped 89 down to 73, so 16 bucks, well, 14 bucks through the thing, and then a little bit of a move early. Again, if you see on the weekend analysis, a little bit of a move early to then reverse back up, hence this little action here. This is what we were looking for. And so what we're kind of seeing at the moment, don't get too tied up on the fact that it's gone and overshot the sort of channel a little bit. I still think this is probably destined for a break, as in probably most likely coming down here. We still have to confirm it, of course, and a confirmation's underneath 73.90, yesterday's low. You take that out, well, it's going to move very quickly to 70.90, which is only $2 down. You're going to find some support here, because if we start to build the chart out, you can start to see, well, there's obviously a zone through here. Let's put that as a zone. So you're going to see some sort of reaction here, but certainly underneath this, none of these little sort of choppy zones are going to happen, going to help it here. Then you're looking down, potentially down over here, down to, as I said, 63. So there is certainly the makings of this thing to sort of come down quite substantially. But of course, with these things, as I say, you need the confirmation first. And even if this thing is to come down, generally you're not going to see, unless it's like this kind of move here, which we've already seen play out, you're not going to see 23% retracements. A 23% retracement is very strong with the trend, sell off, rising, whatever, whichever direction it's going. So take your fib, mark the high, mark the low, drag it out, and then look for what we're looking for here. And as you can see with this, we have a little bit of an area up through here around this 80 level. 80 is a big round number, of course. It's a 38% retracement, give or take 20 cents on that. And it's a very strong trend continuation. And this is why I think that sort of like we'll probably see the same with gold as well, i.e., a little bit higher before the sellers come in and then push back down. So I'm not generally just looking purely at one chart and saying, okay, well, this is at its sell point right now. I'll look at the other charts. I'll say, look, yeah, because these things will sort of kind of have, this is what I sort of dubbed sort of cross chart confluence, is that there's a confluence across the chart. So there's a confluence on this chart here with this daily level, 80 as the round number, 38% retracement. That's a confluence on this chart. There was a confluence up here where we had the daily resistance, top side of the channel. That was a confluence. Now, what I try to sort of do as well at the same time, just for that extra added level of, general theme, like things move independently to a certain degree as well. But, if we're going to see a sustained move like this, they're going to move together. Silver got smashed, gold dropped $100, silver dropped $14. They moved together. So if we're going to see the next version of this move here, i.e. a massive sell down, breaking these kind of sort of lower levels, they're going to happen at the same time. We're going to see this level here or this level here. Maybe, you can't tell which one's going to hit. But the thing is, you're going to see major levels, which is this one here at 73.80. You're going to see 70.40, whichever one. These are the kind of major levels. If these things break, we're going to be seeing gold break 4,500 at the same time. It's going to be a general market consensus to be dumping metals. Likewise, if they both recover, they'll both recover at the same time. You know what I mean? So that's the cross chart confluence. So what I'm sort of looking for here is potentially a little bit more high, a little bit of a push up here. If we like, it doesn't mean it's going to stop here. I'll just make that clear. This is just my sort of feeling at the moment. If we are to see a potentially strong move, if it rejects from the 38%, that shows strong trend continuation retracement. It's come back, it's sold down, it's come back up 38%. The sellers are like, that's enough, boom, okay, let's go, bang, and they push it down. If you see that rejection from the 38%, it means that the sellers are just they're not going to wait to come up here. There isn't enough buying power for it to get up there, and then it'll push back down. It could also, as I said, come up here to the 61%. 61% is also a very strong level. So if we bang a little zone in here, that's a top side move. Should it break through that 38, then we're probably looking up to say 83, 60 at that 60. What's that? Sorry, it's 61% retracement. So they're the two levels that I'm looking at, and they both will see a reaction, but they tell it a slightly different story. This is if it rejects from the 38%, then there's high demand to get out of this product. That means there's a higher chance that we're going to be moving lower. If you come up to the 61%, it still means that you probably get this third wave. So you probably could still see it back down from, if we get up to the 61%, I think that's a time you could probably go a little bit heavier on a short position if you want to sort of try and sort of get this move back down. But your target then really is just sort of hitting these lows at 75 or channel support. Most likely we're not going to see a V, and I say most likely because it's obviously this thing sold down and then went all the way to the top, but most likely we'll see a continuation down here, and that's what I'm kind of positioning for. But as I said, I think it's important, and I think this is going to be the tell. If we reject from 38%, so it's 70.80, 79.80, sorry, If we reject there, then I think there's a higher likelihood that we're going to be sort of driving this thing and sort of coming down, testing 70, and then of course see what happens at 70, and then potentially down into the 60s, because that's a channel break as well at the same time as that rejection. So there's a little bit to sort of unpack there, but short thing, first things first, I think this thing's potentially got a little bit of upside before we come into a sell zone. All right, let's keep ticking on. We got the dollar. So the dollar was very interesting. I mean, again, look at the plans from the weekend. We were saying bit of up and then bit down. Now, this is kind of, I don't know, do you want to call it interesting or frustrating? I don't know. Couple of things to unpack with this. One, we got very close to closing this gap, but we didn't quite close it. And this is why I say it's sort of frustrating, because it would be so much cleaner had we closed the gap and then got this push down here. The fact that we sort of like got close but didn't quite do it means job not done. That's the first thing. And two, it means that sort of like once it still comes in here, we're probably still going to see some reaction back down. So it just means that, in my opinion, we're going to get a lot more chop. So let me get rid of these ones because I'll build this thing out a little bit as well. All right, so where's that little thing? So what I was looking for was a move to here to close the gap, move down, push through. That's what we were looking for. We didn't get quite here to close the gap. I think that's important. The market sort of front ran it and did this. They moved up, but then they didn't close the gap. Sellers came in, pushed back down. So what does it mean? I think it means that still we have a reaction that will come once we hit here, but now the next leg's going to be like this, potentially, to get up to that 100. I still think we're going to this 100, but it just means that instead of this being in a simple sort of, excuse me, up here, close the gap, move down, reattach, and then move up, see how this is cleaner. Had it closed the gap, I think we would have been down and then up. There we go. As we know, things don't really work like that. So it means that sort of like while we sort of want to have this nice clean, metals up, metals down kind of thing, I think we see some, like you've got a tiny, tiny little gap here. So it's maybe early, and this is, again, look at this with the cross chart confluence. And again, look, this could be wrong, who cares, whatever. This is my take on it all. We've got a gap here, very small, but this is yesterday's gap, didn't close, right? What would happen here? Well, most likely it'll come down, close the gap. This is what I'm thinking anyway. We'll see how we go. It hasn't opened yet. Close the gap. What happens then as it's closing the gap? 90 to 10%, we see metals move inverse to the dollar. So if the dollar comes down to close the gap, metals move up. Well, that's what we've seen. We've seen metals a little bit up this morning. What happens when it closes the gap? Well, we can see what happens generally when it closes the gaps. We get a big reaction. Hence why once we close this big gap, I think we'll get another wave down. But in short term, if we come down here, close the gap, to a certain degree, it doesn't mean that the job's done. It could still come down lower, of course. I'm just saying that you could expect to see a reaction there. So dollar down would be metals up. Close the gap. See the reaction on the dollar. Dollar starts to gain up. What happens to metals? Metals move down. That's how I'm building it out at the moment. So I do think while the dollar comes down to close the gap and do this little move down here, that could give us that slight little push, because we're not looking for a big push on these assets at the moment. If we go back to silver, we're pretty close to where we need to be for that first 38% retracement. It won't take much. I mean, we've got a bit of space. This on the 4 hour, we've got a bit of space on this RSI. But what I'm saying is that sort of like if we can see that sort of back and forth flow with capital, what was I? Oh, was it DXY, wasn't it? We could potentially see dollar come down here, achieve this target of closing the gap, could come down further, whatever, comes down here a little bit lower, that pushes metals up. We've seen metals up a little bit this morning. Then as it starts to enter this potential leg, which is what we're looking for, to get up here to close this gap, that'd be metals down. That's metals attempting to sort of break through. And this is why I say it would have been so much cleaner had it already just closed that gap here, because should we get up here, dollar closes its gap, then it starts to sell off. What happens? Metals push up again. And then sort of potentially we hopefully then in a perfect world, which of course charting and trading isn't, we see this leg move through here. So I think it's still got to be very choppy. I think we've got some upside with metals. I think we've got some downside with the dollar, and I think that eventually that'll sort of reverse, and we will see dollar at least minimum come to achieve the target of closing the gap and moving towards 99.50, and then we can see where that goes there. All right, and finished off with Aussie because Aussie's another one. So it came right down into the zone. I mean, I think I called it the 71.10, 70 to 71.10 or so. Obviously, just in this little support zone through here. Got very close, about 71.17, and then bang, push back up. Interesting enough, I've got a little bit of a zone through here. I wouldn't say that this is something. Through here. No, I wouldn't say it's a major kind of thing for it all, but anyway. Just happen to have this one sort of through here and it's rejected through here. Again, this is going to be the same sort of thing that we've got with gold, the same with metals and that. If we break the high here, 87, then we're probably going to be coming up to test 72. 72 will be getting close to that breakdown level because breakdown level's at 72.20, which is a fairly decent bounce off the lows, over 100 points or so. But I still think the fact that the overwhelming theme that you had on a daily, remember, this is a 4-hour chart here, but on the daily, you had a wedge break, negative divergence, means that this needs to be resolved. These things don't typically get resolved in 1 or 2 candles. What it can do, though, is come up here, hit any sort of short stops that have got their stops up here, because that's where the textbook told me to put it, that kind of attitude. Drag in some longs. Aussie's been very resilient, let's be honest. Push back up here, drag in some longs. Then we have this move here. Like, regardless of what happens as to how high this bounce does come, which I do think it'll probably get a little bit higher, and if we do see that dollar weakness early, we will see a little bit higher on these sort of things. If we see metals push up, if we see the dollar push down, Aussie is going to push up. So that's fine. We know that. But your general 1, 2, 3 will play out. It will. The thing is, does this third leg come here and we give us a higher low and we potentially push a little bit higher back up to here and just say that's it for the negative divergence? For me, I don't think that's enough to play out a wedge break and a negative divergence. I think that price needs to be punished a little bit further than just like a drop and then but recovery like that. It just typically nothing's ever 100%. Typically, it doesn't work like that. But what it does do is have these sort of 3 waves like this. So we've got the wave down, we've found support, we're pushing up, we will find resistance, and we will have this drive here. And this is the drive that's going to give us either double bottom or give us that break to go through, which will get us down to our 70 cents target. Hence why there may be some short-term options to catch this bounce a bit more, same with metals, but you don't want to be holding on when this thing does start to enter this third leg, because this third leg has the potential to be coming down a little bit lower. I'm just going to manage a quick pause this again. Oh, I'm back there. So yeah, I would be reluctant to be holding longs on these things too much. Hence why 2 seconds ago I closed all the golds because it was a nice little bounce. That's fine. And let's see how these things sort of play out. All right, quick look at the data. I think Thursday we got the unemployment for Aussie, so a little while off on that. Not looking anything too super flash anyway. Today we have, what do we got coming out? We've got this guy I was speaking before, 9:30. Aussie's been dribbling but not really doing too much, so small reactions. Claremont count, boring. No, nothing of note, sort of data-wise in that today. Got the minutes meeting, the monetary policy meeting minutes at 11:30. That's about it. All right, cool. That's it from me.